Before we start, I'll just read you the safe harbor statement. The information presented today contains forward-looking statements that involve known and unknown risks, uncertainty, and other factors. These may cause actual results to be materially different from any future results, performance, achievements, expectations, or targets expressed or implied by such statements. For a description of some of these factors, please refer to the company's private placement memorandum, which is available upon request. Gparency was opened up with a mission. The why of Gparency was to create equitable access for all. When it comes to commercial real estate, by virtue of the fact that the buildings are typically in the multi-million or $100 million price range, it's not meant for every single person can even break in. There's also certain laws that restrict who can invest, who cannot invest into real estate. But what I found over all my years in commercial real estate, which I found to be really amazing and a little bit crazy, is that no matter how big or small a commercial real estate owner is, there is no one company that wakes up in the morning and obsesses over the interest of that GP. Nothing. If the GP is a general partner, is a commercial real estate investor, the syndicator, wants to buy real estate, they have to go into one direction to try to find deals to buy and talk to brokers or go onto websites. They need help with financing, they go to banks direct, they could talk to mortgage brokers. They need leasing. Every single step of the process, there's someone else to talk to. And when they ask for advice or help, that person has a built-in ulterior motive to get the business their way. So even if you have the most honest broker, when a client's going to call them for advice, the intention is going to be that when you're going to actually transact, you're going to use that broker. The goal of Gparency and the name is GP is for general partner, that's the commercial real estate investor, the owner, and full transparency. And to provide equitable access. That is, if someone has $5,000, if someone's going to commercial real estate, they must have $5,000. For $5,000 a year to $6,000 a year, they could walk in and they could have the same access, equitable, no matter how long or short you've been in the business, how big or how small you've been. When I went out to raise the money a year ago, I learned from being a commercial mortgage broker where you only get paid when the transaction closes. I was trained in the art of one thing, how not to waste time. And I also felt the same way for those I was talking to. How do I ensure that no time gets wasted for those people that I'm pitching to? So the way I set up this the whole pitch and to go raise the equity is as follows. Instead of the normal pitch book, I said, let me start with a couple of points and questions. If based on those questions, you'll be able to know if this is for you or this is not for you. And we do the same exact thing here, how I recruited and signed up and took investments from the 150 investors. And then I'll tell the full story and talk about the projections on the going forward. We start as follows. What is Gparency? What does Gparency do? Gparency does three things. Two of them, no one else does. One of them, the third one, the other people do it, just priced differently. We think we're the best at it. The first thing is ground sourced and updated listing with alerts, which means as follows. We right now, and I'll show a presentation soon, we right now have 40,000 commercial properties that we are tracking, listings that are for sale. To put that in perspective, in the commercial real estate space, the number one data listing company claims there's only about 200,000 properties in total that are for sale. So we're holding here now, we launched this technology just a few months ago. We're at 40,000, which is about 20% of the market. We're growing by 1,500 net on a weekly basis. But what makes it unique is not just that we're just a listing site. What makes it unique is that we have ground source listings, which means boots on the ground. Where do we get our information from? We get it the same way every owner would get it. If you're an owner, you wanted to buy real estate in any market, what would you do? You'll hire a team of people, start calling brokers, speak to sellers, go to networking events, find out what's going on within every single market. That's the first thing you do. We do the same thing. We have a team of people that are doing that. But we're a staff of almost 200 people. As we're talking to people, we get updates. We see what's going on. We get that information. But the icing on the cake is we launched similar to for crowdsourcing, we call it credits. We play on the word CRE and then credits, and that's the word together, is that we allow someone to say, you know something, I have information in the market, like crowdsourcing, like Waze. I'm going to give you that information. I know what's going on in my market. And in exchange for that information, whether it's a new listing, data's wrong, something, we will give them credits to pay for the membership. So potentially, we have people that are getting free membership because they're sharing data with us. And there's people all over the country. These could be larger real estate owners, people who work in a big real estate company, people who are just starting out, They're scouring for deals. When they find information, let them share that information with us. Our competitive advantage is the crowdsourcing and the ground sourcing of how we get that information. But then it's with alerts. So what typically happens in commercial real estate is as follows. A commercial real estate owner is looking to buy real estate. They hear about an off-market deal. Well, I don't want to, this is not the place to debate. Is there really such a thing as an off-market? Not an off-market. One thing is for sure. Within a week, they're still being on the market or being off-market. It becomes on-market and everyone starts knowing about the deal. It might be put on sites, it might not be put on sites, but people start hearing about these deals. And what I learned when I first came into this business and saw it time and time again over my career is that the most valuable deal is typically not the deal that hits the market day one. Because if you think about it, if you have a property that's worth $10 million, you're not looking to sell. But if someone said, I could get you 12, for 12, I'll sell. That off-market deal hits the market at $12 million. But then everyone tells them, it's not for me. I'm not interested. And then over time, the seller realizes no one's making offers that high. He goes from 12 to 11.5, goes to 11, goes to 10.5, goes to 10. And what ends up taking place as time progresses is that the price keeps changing. And at a certain point, if you were lucky enough to be babysitting and dating the seller or the listing broker at that time, you'll find out that updated price. This is what first thing we do. Not only do we have this information from getting it from social media, networking and talking, we call the first mile, getting the listings and updated, but then we have alerts. The minute the price matches what you're looking for, we'll send you an alert that minute. So you can look at a deal 4 months ago. Just click you're interested, but the price is too high. And you can be driving home one day, you'll get a notification, hey, remember that building you're looking at? The price just changed. That's number one. Number two is we have a team that's tracking every single lender in the country, every active lender. So to information and belief, if you call every type of lender, there's probably between 5,000 and 10,000 different lenders at some level, private lenders, who knows what. The most active are probably 700 to 1,000 are really most active. We right now have information and dating and consistently updating on 3,000 lenders. So at the same exact time, not only are we going to be able to tell you what's for sale and the price points, and from a 2 to 4 family up to we have right now out of the 40,000 properties, about 40%, or I would say 25% of those properties right now are probably not listed on any other public site right now. Because our uniqueness is we get the information not necessarily from the broker. We don't charge the listing broker for the data. We hear about a deal, we post it. We have brokers who call us for free advertising to be able to post their deals. But when we get this information in, and someone is looking at it, they say, I'm interested in 123 Main Street, right there we'll tell that person which lenders will be interested in lending on 123 Main Street. So this way, that owner, if they wanted to go themselves to a bank and call, they'll have the information in front of them. They use a mortgage broker, no problem. Use this information so you're more knowledgeable when you talk to your mortgage broker. Maybe your broker made a mistake, missed the boat, didn't realize about a bank. Not every broker can know every deal, total recall. The third thing we do is brokerage. If somebody decides, you know something, I don't want to shop the deal myself. I want your banking team to shop it. Or I want a broker, full-fledged. This is where I personally get involved with my team, and I'll personally act as a broker. We'll be your broker. The brokerage service is the same exact brokerage service as I've done my whole career. The difference is, over here you're paying up front, more for the time, versus paying a large commission at the closing. I'm not sitting here to debate, are we going to work as hard, not work as hard? We're letting the results speak for itself, as I'll show you soon. We just closed out 2 largest deals, a complicated office portfolio for $65 million. The fee was $11,000. We also then went ahead and we raised equity on a different deal, a tad below $7 million, the same thing, $11,000. So we're doing hundreds of millions of dollars worth of deals, the brokerage. But again, it's about empowerment. At one point, the thought process, the name of Gparency should have been Gpowerment, for empowering the GP to be in control, or transparency. We went with the transparency route, but at the same time, it's that empowerment. People ask me, where do I think the mortgage business is going to go in the next year? All I can tell you is one thing. Every single real estate owner, as I'm going to show now in a demo in a second, will know which lender, what rate, what terms, and the lender was willing to talk to them. If your client knew, I've talked to a mortgage broker, if your client knew this information, how is that going to affect you? If you think that it doesn't make a difference, they're still going to use me, then you're fine. If you think that no, they're going to know everything, then they're never going to use me, then you're not fine. I can't decide what owners want to do. I know that an overwhelming majority of owners do not use brokers, and those that use brokers, the main reason they use the broker is because they want someone with an expertise to do the time. And that's what we're providing. And thank God we're seeing success in all 3 levels. So I want to go a little bit now just to show the actual presentation. So the website here is gparency.com. Someone could come, typically, the way I describe this as we're solving the first mile. People ask me about all these other sites that are out there. How are you different than LoopNet? How are you different than CoStar? How are you different than Crexy? How are you different than this site, that site? We're not even attempting to be that site. We're the first mile. When you wake up in the morning and you say, I want to start my day, I get a piece of real estate, what does a typical owner do? They go to Google Maps. We have a blend of Google Maps and we start off with. So here's how this whole thing works. Find the deal, you're able to log in. I will talk about the promo, but here's the product itself. So we have right now, we are tracking here. The screen here is, 1 second. Okay. So on the screen here, if you look at the bottom left corner of the screen, there's 41,000 actually. There's 41,000 properties. Now to put in perspective, we're probably adding about 2,000 properties a week, but 500 properties were also taken down at times. This deal is no longer for sale. This deal went into contract. This deal closed. So we're constantly updating the data throughout the day of all the sources, how we get this data. Number one. To put it also in perspective, we believe that today we're probably the third company in most active listings. To our knowledge, there's LoopNet and CoStar. So are they two companies of one? They own each other. CoStar owns LoopNet, and the other company is Crexy. After that, there's no known company focusing on listings that has more than 40,000 listings, and we're growing. So it's 41,000 listings. We have almost 1 million sales comps and finance comps for the last 3 years that are built in here. So someone comes in here, and let's say you wanted to start looking at a property in Altamonte, Florida. Altamonte Springs, Florida. So as soon as you start looking at the map, the bottom left corner, the grid here is actually the city. But the way the technology is set up is that what you see on the map in front of you, that's what shows up the number of the grid at the bottom. So there's 31 listings. So if I want to turn off the sales comps and the finance comps, so now the numbers start, it's only going to show the listings is 31. Let's say someone says, I only want to buy a deal. Let's drill in a little bit more. Let's say they're looking over here, they say there's 4 properties. What I find interesting is I call people up and go, I know everything in my neighborhood. You really know everything in your neighborhood? How many buildings do you think are in your city? And also they start realizing that, something, there's a lot more listings than they thought. Also, who are the new brokers? I meet people go to shows, go to networking events to find listing brokers. Here you see right here, look at this example here. It's a $3 million property for sale. So let's talk about this property card for a minute. This is our signature card that's here. The picture comes from Google. We want to make sure no one sues us, so we're not taking anyone's pictures. The property type is public data. There's the address of the property. The price is the price that we got either from crowdsourcing or we heard straight up. And this other information right here is based on public data. You want to call the broker. Here's the listing broker. Pick up the phone, call the listing broker to find out what's going on in this market. This area is the property. You want to see Google Map view. Right here is Google Maps, regular Google Maps, the same way you're accustomed to using Google Maps. I don't have to stay on this for this, but here's the things I was saying before. You have alerts. I don't want this at this price. You could click confirm, and then it will automatically start sending you the alerts when the price changes. Eventually, we're going to have it that you could actually just type in your price. Don't alert me until the price drops to blank dollars. Number 2, you notice something wrong. You could select, the listing price is wrong. Put the information in, you submit it, and after you submit it, you'll be able to get credits, which can be converted towards your fee, towards your membership. We set this up along the right bar of the whole entire site at any given moment. You go back at any given moment. I love the site, and you want to click here. And what part of the site do you notice something's wrong? I notice the price is wrong. You can either just come this way, click it here, type in information in here, and then you could earn credits. Someone could earn credits either by, giving us information here, or by going and emailing credits at Gparency. So this is becoming the activity. This is really starting to pick up in a very, very big way. But while you're doing your research here on this property, let's go back to the research. So now you're looking at this. What else is in the neighborhood? You just looked at this property. You notice as you're going through, there's another property here. Interestingly enough, this is from a different broker. So if you want to have an idea from another broker what else they have in this neighborhood, they could talk about this property as well. Here's another property as well. Also a different broker. Over here with the dollar sign is we don't have a price yet. Because again, we could have heard this is for sale. Here's the example. Someone will tell us the price. You'll get credits towards your membership by telling us this price. So if somebody's looking now in this area and they say, listen, they want to start filtering. I'm not interested in deals below $1 million. First of all, I want to just go back. I'm sorry. You add the sales comps and the finance comps. These little buttons that are these boxes that are popping up, these will tell you sales comps. This is public data. So as soon as you click on this, this could tell you this deal was financed a couple months ago. by Trust Bank for $1.4 million. That's the information that comes. You have an idea what's going on in the neighborhood. We will soon have on almost every single parcel public data. So you don't have to go from here to your local public site. Again, we want to solve for the first mile. You wake up in the morning, you have real estate, come here, we'll start building out calculators soon, all different features and alerts and notifications and likes to be able to, your buying profile, to be able to really start building this out. So this is on the first point they said on the listings. Now you're looking at this property, it's an office building, it's a warehouse. Who's the lender that will lend on this warehouse? In another 2 weeks, we're going to be redoing this totally with better, look at the speed. This is fixing up the speed. It's pulling from public data. It's pulling from information we know, and it's pulling from based on quotes and deals that the banks actually, and their lending profile that they're telling us. Based on that information, this algorithm is telling us which are the best lenders to do this deal. So for example, if you're going direct, call bank by bank. Let's say you're not going direct, you're using a broker. Whomever the broker is, you can tell the broker which bank you're sending it to. The broker will tell you, I'm going to Citizens and Webster and Morgan. Oh, what about Quaint? Oh, good point. I forgot about that. I thought about that. Let me call them. You could use this data. You own this data. Basically, think about, we obsess over the GP. For that membership fee, you have access to everything you're seeing and you're in control. So now I'm interested in Citizens Bank. Citizens Bank will tell you, this is the person to call, this is the phone number. And you also want to see the profile, more information. What's the profile they updated a couple months ago? This is the profile they updated. This is their information. So at your fingertips, you have all this information, bank by bank and loan officer by loan officer. What we're really building in the next couple of weeks is that now you can only search by a few criteria. Soon you could search and filter not just by 2 criteria, by 4 or 5 criteria. You'll be able to start filtering by. But we have certain people, a big product that we have, and this is what I think is the best value for commercial real estate owner, even if you go direct, is we have a price. You have all these lenders. You only want to call 2 or 3. Our brokerage arm starts with the banking side of it. That for $4,000, you have this deal. You want us to shop it for you? We'll shop this deal for you. You don't have to run it. You don't have to do any of the work. We'll take the deal, shop it to the banks, file for the quotes, negotiate the term sheet, and then you take over. And again, we have certain people who take it over and run it to the close themselves. They use that data to get themselves better leverage at their own banks, or they use that leverage to call up a broker. What you do with the data is your thing. We're a data company. We're a data company first that's offering brokerage services if you want us to to do those brokerage services for you. This is the product. This is the pitch, this is the product. At this time, this is what I turn to every single investor. I'm going to ask you the same question. I just met your brother or your sister. They called you up and said, hey, I just met Ira, he just hired me, and he gave me 100 commercial real estate owners to go after. In the next 12 months, how many of those 100 will I sell to? It's anyone's guess. You just saw the product. You're in real estate. You have some sort of idea. Would you buy this for $5,000 a year? That's what we're selling it for. We sell this product either for $6,000 a year if you're paying monthly, or $5,000 a year if you pay up front. Unlimited. Unlimited listing searches. As we keep building out technology, you'll get the technology. As you see the banking where it's holding. How many of the 100? And then I stop. I got answers from as aggressive from people said, everyone should buy it. You don't sell to everybody over time, so 90%. Other people said, I don't know, 10, 5, 10, 25%. Why should everyone buy it? And everything in between. This is the frame of reference. If while you're thinking right now, your answer is 5%, 4%, 3%, 2%, 1%, or 0.5%, then there's a nice business. This is not what you should be investing in. And I can tell you don't have to watch the rest of the presentation. Not as a playing hard to get. I don't want to waste your time. The people that are interested and why I was so passionate and was willing to go ahead to revolutionize the industry and take a major risk in walking away from Eastern, at that time, letting the top brokers leave and making a move of educating the world about how, an alternate way to get financing done and price points totally different is because I also believe there's 1 million people, we're a year into this, that could buy this. Why should someone say no? You don't sell to everybody, but that's what I believe. Why should someone say no? And that's what I want to talk the rest of the presentation about from here. So what's the size of the market? There are over 1 million GPs. Forgetting about all the new people who want to break into the real estate, forgetting about all the limited partners that might have access and could use the different tools here, there's 1 million. So my simple market cap is, there's 1 million times 5,000 is $5 billion. In Eastern's heyday, we brokered $5 billion a year. This is $5 billion potential of a market that gives $5 billion of recurring revenue every single year. What percent can I get there? That's on one point. Second is the banks. There's 3,000 plus very active lenders. It's a marketplace. They could also pay $5,000. I give them also tools and other things that they could use. I'm never, ever going to sell a bank that if you pay, I'll send you better deals. Because I don't work for the lender. I work for the GP. Every move we make has the interest of the GP. So when we're selling things to the lender, it's when you just saw the presentation. Let's say someone is not a member and they see the name of a bank. They want to see more information. If the lender is a member, then they could show it. We could sell them different advertising, but we're never sacrificing on the deal flow. On the listings you saw, we have listings now on the site from 1,300 different brokerage firms, not individual listing brokers, brokerage firms and growing. We also have a plan to be able to charge them also $5,000 and give them also data. They can manage their listings unlimited for the whole entire company. This product of $5,000 is a year, not a month, and it's for the whole entire company. So if someone has in the office 10 people, they're not paying like a lot of companies charge per seat. This is $5,000 for the whole entire company. Our sales funnel. What is our sales funnel? Our sales funnel is as follows. Someone hears about the product, they log in, automatic 7 days. They get a 7-day free trial. During these 7 days, we start educating them on this concept of credits. That by them helping us with any sort of data that we're missing, at any level, they could earn credits. They could also get credits for membership. They should also get credits towards referrals. They could get credits. They could get credits for introducing us to people that just might want to help different parts of the program, giving us ideas that we actually implement. So that's the credit. That's the foundation of we want to take our system. Stop putting back into the GP's hands that if you're someone here that has data and has access to data and can help us, why should I have you help us and also have to pay for data? The days of paying for data, if you have value to give, you shouldn't have to pay for data. Your data is valuable as well. But the next big promo is we call 3 for 30. We have a campaign which is starting to pick up a ton of steam right now where we tell someone, you know something? You checked out the site. You checked out your neighborhood. We know we're missing 160,000 properties. That's why we're getting this. That's why we keep moving up faster now. And there's constantly properties leaving, coming and going, getting on for sale, off market, putting on hold. It's in contract. It closed. It didn't close. We have a major promo code we call 3 for 30. We tell someone, you know something? Find us 3 addresses, 3 listings that we don't have. Give us the full information like you saw that we need, and we'll give you 30 days free. And then during these 30 days, keep earning more credits and potentially take the contract you sign monthly, and you'll never have to pay for membership over the course of the year because it's $500 a month. But if you earn enough credits during that month, to put it in perspective, giving us a full listing is $15. So somebody goes out there and roughly gives us 33 listings over the course of a month that we don't have, they're never paying for membership. And there's other ways to earn membership, just to put that in perspective when we're selling it. Then we try to get the client to sign up either for $6,000 a year paid monthly or $5,000 a year paid up front. Once they're a client and they have a deal, they could use the shop the deal, it's the $4,000 product, or the full brokerage for $11,000 product. Those are the 2 products we have. And the cycle on 7 continues. How do we get them to become like an affiliate program? If they're liking us, they're using it, tell other people. When other people sign up, if they sign up through them, let's give them more credits to earn credits to the membership. The credits work only for membership. The credits are not transferable. It's not a gimmicky thing. It's that if you're going to work with us to help us get our data updated, that $5,000 fee potentially you do not have to pay as we go ahead and move forward. So let's talk a little bit about the future where this is it. Take us to the future, but let's start with the history, how we got here. For many years, I always believed that the market is going to change and technology is going to revolutionize the industry. I had no doubt that that was going to be. The question is when. And over the last several years, prior to launching Gparency, I felt like we had like 2 businesses within one business while I was running Eastern Union. And one was the pure brokerage, and one was investing in technology and data and coming up with different price points to position the company to where the market is going to go ahead and bring us to. At the root, we're trusted advisors. So no matter where the market went and where the pricing went, we were going to fit that role as the market changed. But we've always known in the industry who is the most tech advanced was Eastern Union. Who has the best data as a firm and how we structured certain things, that was always our edge. I get a phone call one day from a person in a VC firm and says that I was not invited to a round from a company that just raised a lot of money. And you were always the comp. You were always the company that who else is trying to do something with digital brokers, something with brokerage. Who is that? It's you. And before that call, I didn't understand all the terminologies of how it works with, the pre-money valuation, post-money valuation, liquidation press, not liquidation press, how this works. I never understood how this whole thing works. It was foreign to me. And this person said, listen, can you come down to a meeting? They started making offers, and I got advice from other people. I went down to other meetings, and I'm an investment banker, and I learned very quickly this thing was being thrown at me. And to put in perspective, when I realized something was here was gold, is that I went to a meeting with someone who typically doesn't do early stage investments. I realized also, like in commercial real estate, there's people who invest, they buy land, they rezone it. There's people who just start from the construction, just start from when it's built, just start when it's already established. They want to buy existing buildings. Everyone has different things in real estate. Same thing by venture capital. Different stage that you come in, you start to come in. And I was sitting by the meeting, and all of a sudden, in the middle of the meeting, this person stops, and he says, I'm interested in putting in half the money. I said, what happened? I thought, this is not what you do this early. You helped me advising me. He said, I never understood why in commercial real estate there's no such a thing as the Bloomberg terminal. It never made sense to me. Everyone, there's trillions of dollars worth of the industry. There's so much data. How come no one dominated at that level? There is one company in CoStar. You look what they're trading at. They were $1.50 billion company, and I think they're $30 billion. They're trading like 11 times this year's revenue. And he said, I always believe someone is going to do it. And it needed someone from the inside who's willing to risk it all. So he says, he goes, when I make investments, I have different check boxes. Over here, I have a business that I think I could 100 times my money, he tells me. I think that it could be a cash cow, this business, like Bloomberg Terminal. I think along the way, there's a bunch of different options along the way where this thing could exit. In the worst case scenario, in his opinion, the worst case scenario, he says, you're a discount broker and everything in between. And I'm taking someone that's willing to risk their core business for this, because if those pieces are coming together, I never had such an opportunity. That was the turning point for me, that the way I was thinking from an insider, potentially I'm missing the boat. Ultimately, there was an offer put together. It was a $12 million offer. They said you got to spin off Gparency to be its own company. You could merge back one day. You could buy each other out one day. But for right now, you have to have it as two separate companies, because you can't build Netflix while you're a Blockbuster. And the reason why this analogy hit home to me is that my whole career, I said it multiple times, I will never allow myself to be Netflixed out of my own business. If there was going to be a Netflix coming into the brokerage business, it was going to be me. So at that point, I basically had the deal. I said, listen, there were a lot of people, as some of you know my story, I struggled early on in the business, and people helped me, came through for me, and I said, listen, I owe it to them. If I'm going to right now go out and there's an opportunity where people think that for every dollar they invest, they have a chance to make 100 times that money, I owe it to my clients, the people that helped me. And I don't know if they'd be interested. They said, okay, fine. You could carve out 10 slots, $250,000 each, and offer to 10 people. I started making a few phone calls with the same story. I said, if we had a product like this, we sold $5,000 a year, what percent of people would buy it? I'm getting an offer. I'm willing to risk it and go. Are you willing to? What would you want to invest? I was getting very quick yes after yes, to the point like, why you capped me at 250? They wanted to put in more money. Once I realized the level of interest, I ultimately called back up to the people who put the original deal together. It's the structure. I said, I thank you very much. I'm going to use your structure, but I'm going to raise the money from my own network. And they thought I was crazy. I said, listen, if you met me and you just heard of me, I don't know you a week ago, 2 weeks ago, and you're ready to throw this kind of money, then people who knew my whole life, then it makes more sense they should do it. You don't understand. I said, listen, I have to do what I have to do. I appreciate the opportunity. And I ended up raising the money. Thank God we oversubscribed. It was known as the largest seed round at that time. We had 150 investors in. Quite frankly, when people called me up and they said, how much you want me to put in? I said, I'd rather you actually put in the minimum you're willing to. So we took money from $25,000. I have some billionaires, to my knowledge, that $100,000 less invested, because and very influential people in the business, because they looked at it and said, I want from their view, is that if you're investing in this, I said to them, whatever, your money's green. You're going to help me in my business. So if you're willing to help me and you only put in $25,000, and I get 10 people like you, I'd rather have 10 different people like you giving me a total of $250 than one person. And when all said and done, we oversubscribed, we hit the max we set out to raise at $15 million, and then we launched Gparency. The original business plan, and one part I'm really extremely fortunate, is that the overarching business plan is the same from when we started till now. The same mission, the same vision, the same plan was the same. The goal for year one, you have to go back in time. This is while the market was riding high, and no one was interested in. They weren't focusing on revenue. They weren't focused on anything like that. They focused on building this amazing product, revolutionizing an industry, and game changer. So the focus was, don't focus on sales. Go build out a team. When they gave me this money, I didn't have my team in place. I just said if I had the money, I could put together a dream team with God's help. So build out the team, launch a digital product, get proof of concept that there's a market for a marketplace, not just be a two-sided marketplace, buyer and seller. Get a marketplace. We have GPs, we have lenders, you could have listing brokers, eventually even have certain vendors. Prove it out that you can have this. And then the plan initially was do another $12 million raise at the end of this past year, end of 22, which 1 year in, and then another one. The idea was it's going to be a $36 to $39 million project to build every single thing out. That was the plan. That was the focus I set out to go ahead and do. With God's help, we formed the whole team. Co-founder Ben Schweitzer from Freddie Mac. Barak Qureshi is the CTO. Was in the Marine Corps. Was a key bank. And we put the whole entire team, amazing team together that we launched. Then we launched the digital product, the one you saw now. We launched it in October, several months ahead of initial schedule to be put to build it and put it up. We exceeded $2 million in revenue year one. The goal was nothing. And I was told when I started, I still remember a major investor told me, says, Ira, if you could have $2 million year one, and next year projected you'll bring over $10 million in revenue, you could name your valuation. You could be worth who knows what, 30 times, 40 times on the ramp up. Those days are so gone. As you'll see from the valuations, nowhere close. So it's the initial investors. On an emotional level, yes, I'm beyond ecstatic to be sitting here, and I'm fortunate to be in this situation. But when I look back where I was told we could be, valuation-wise, we hit every target, yet valuation-wise, we're talking about numbers that are drastically lower. So which benefited the initial investors because they had a discount to this current round. And in general, those that are looking to come in now, in my opinion, are coming in at clearly way lower than we thought just 6 months ago the valuation would have been, and on a risk-reward tolerance. I still think the end of the movie is going to be the same, but right now, able to come in at this price point. And we sold memberships to GPs and to lenders, and we closed hundreds of millions of dollars with the debt and equity deals. As I mentioned before, the two highlighted deals, we closed a $65 million funded, we charged only $11,000 deal. We raised $7 million, a tad below $7 million, and again, on that equity, and raised an $11,000 fee from there. So I want to talk a little bit about the projections and how we got here. Up until a couple of months ago, we had 5 salespeople here, averaging 6 contracts a month. That's what they were selling. They weren't aggressively looking to grow it. The top salesperson 1 month sold 12. They were averaging about 6 a month. Once we launched the digital product, and in spite of the market slowing down the way it was slowing down, we said, hey, we could hire more salespeople. So we started hiring more salespeople. And as we hired more salespeople, and the feedback from the initial salespeople were that no one was really telling them no. No active buyer was saying no. Instead, it was not until. Not until you have more listings. Not until listings are updated. Not until you have this feature. Not until you have that feature. And realizing that we could really scale this. What's stopping us? And based on my strength of hiring and training and the sales side of things, we said, let's keep growing. And we ended up taking these 5 salespeople, turning them into team leaders, and we went up to 50 salespeople. We were able to handle it. Said, let's quickly go up to 150. We came with the number 150 because if we could get 150 times 6 contracts, forget about growing even, and 900 contracts a month, that's way beyond any numbers that we need, and then recurring revenue starts kicking in. So we're sitting here today with 150 salespeople, and this is the point, where the goal is to work with these 150 salespeople that are literally, some of them started Tuesday, some of them starting last week, 2 weeks ago, and literally work with this group to how can they start averaging a half a sale each, then 1 sale a month, then 2 sales a month, 3 sales, and keep ramping it up from there. So the sales growth is based on, one side is on the human side of it. Then we talk about marketing. The marketing side of it is what we call the multiplier. If the salespeople are able to sell a product just from cold calling, just from networking, just from going to shows, these amount of products, what would happen as we make the site better? What would happen if the product is better? What happens if we have people on the site could ask for, on the site, click a button and say, I'm interested in financing? What happens at that point? We should get inbound leads. We already closed in the last 30 days a couple of contracts that came in totally. Someone went to the website, pressed on a button, more information, passed it along to a broker, to a concierge, to a salesperson, and they closed that sale. So now, the goal now is to say, what happens if we take these 2 things together? So what's interesting that I found is that when we made out the projections going to 2023, we set up the numbers. So I originally believed and thought that we'll be able to ramp up to a very high revenue this year. And what's interesting is when I went out to those that have more experience in the venture capital world and coming up with revenue, they said, Ira, no matter what you do, if you did a little over $2 million in revenue, you're not getting more than 6 times credit for next year. So I don't care what you think you could do in 2023. The most we're giving you credit for is a little over 12 million. And at the same time, since you're in a high growth, we'll go out those multiples of 12, 15, 20, 30 times, those are gone. We'll give you now, while you have quick growth, we'll give you 7 times that revenue potential. And then, but over time, the valuations are getting tougher. That's the words they're telling me as we're going through. So the projection revenue, which we're putting forth, I would like to believe it's conservative. Obviously, as a salesperson, that's what I have to believe as I'm going forward, is a $12 million number. We need to break even. To run the company without having to cut expenses of the company, we have to sign 400 contracts a month. So going back to the number of 6 per person, are we going to have 150 signing 6? Are we going to have 100 signing 6? Are we going to have 80 signing 6? What's that number to get us that 400 break even? I want to go right through that number. Right now, our goal for the first quarter is to close 300 contracts. So far to date, it starts off very small as it ramps up to the 300. We're ahead of schedule the first 2 weeks of the year. But it's not really saying much because we just started the year. But the optimism level and the feedback and the way everything is coming together, thank God, is showing every indication that we should be able to hit and exceed those targets. With the escalating sales, and as they start nurturing, becoming better, and then you get recurring revenue, we're talking about the target for 2024 is $40 million in revenue. But I want to put in perspective the $40 million in revenue. In 2019, and this was the big impetus to the direction of where I saw there's a different way for the business. In 2019, and I said this story over once, when I was running Eastern had its best year. We had the greatest team assembled, debt, equity, consulting, you name it, we did it. We were number 3 in the country in the number of transactions that we work on a year. We closed $5 billion of transactions. Of those $5 billion, the gross revenue was $40 million. But out of the $40 million, $25 million went to the brokers. $15 million went to cover the overhead, the support staff, the people that ran the deals, did the work, and covered the general overhead. That was what was left. And I said, something's wrong. There has to be a better way. And at that time, to date, I worked on, in my career, about 8,000 clients I worked on deals for. Me and my team worked on 8,000 over the years before. And I said, if I would be able to take these clients, pay the $5,000 a year, and then I took that $40 million, more evenly distributed to get great underwriters, better support staff, a few extra support, whatever's needed, technology, data, can we provide the same services for those clients on a recurring basis level? And this would be able to be more secure as a company and provide better value to a client. That was my mindset. And that's really, to me, to be able to go ahead and bring this business to a $40 million number, and that's what we got to the 5,000, all these numbers, that's what's there. So riding right now, I think we have the potential. At one point, I speak to all the staff all the time. Everyone in the company believes. I never in my life had a company where everyone has shares in the company. Everyone believes in the why, the mission, in how we're getting there, where we're up to, the enthusiasm level. What's the only question is? When? When is it going to pop? When are we going to go like this? And all of a sudden it's going to fly like that. When's that moment? We feel it. I feel it. That should be any month, any quarter now. It should happen. When is it going to happen? It's up to God. But that's the projection of the numbers we're going for. That we have a $12 million number that we think for this year and 400 contracts to break even. One other piece of the puzzle, which when we opened up, the only thing we were told, don't focus just on revenue, only focus on recurring revenue. A couple months ago, I got a phone call from one of the big investors who was a huge value to help me out. And he says, Ira, let me tell you something. The world does not care about the technology. The world does not care about the data. They care about one thing: break even and growth of revenue. With that hat on, I'm going back to the same way, the parts that I lived my whole life. And the rest of the industry seems to be going in this direction. They're not giving these inflated valuations, inflated goals, what we could tangibly hold. The goal for 2023 is get to break even. Irrelevant if we sell memberships that have a higher profit margin should have, or if we're selling brokerage that have a smaller profit margin, it doesn't make a difference. Recurring revenue, transactional, doesn't make a difference. We are operating to get to break even. Once we start at break even, then the focus is to start focusing on the more profitable parts of it and the recurring revenue parts. So we going into 2024 is when we really start making projections that we want really that the 75% of the revenue we're bringing in 2024 of the new revenue should be recurring revenue versus transactional revenue or revenue that's not going to recur. So that's the projection in the 2023 and 2024. What are we offering right now? So the total raise from the beginning of time until now is $21 million. The projection going forward on raising is that the next raise is not going to be able to be done this way. This is when we're really going to be needing real VCs that could stroke checks 10, 20, 30, 50 million at a clip. Because then we're looking at all the rage is ChatGPT. We plan on doing the same idea. What happens when we could start getting an API with ChatGPT? And instead of having to call someone up and say, what are the rates on? What are the cap rates? Could you imagine you could type it in? And we feed it all the data that we have at Gparency. And we keep feeding it. To go to that next raise, to scale us up, once we're break even and moving, we're not taking it in $6 million raises, 10 million. It's probably going to go from this point to a much bigger raise. That's the intended plan as of now. So we're raising right now the $6 million. The valuation is $85 million, which is approximately 7 times this year's potential gross rent, I think, of real estate. 7 times potential gross revenue, which works out to 98 cents per unit. We're, like I said, and where I think we're taking this to, there's 100,000 clients, GPs, or banks, members that we think we're going to be selling membership to in another 4 to 6 years. When I opened up, we said 5 to 7. The plan is 4 to 6. Could we get to 100,000? That's 10%. Going back to the initial question I asked you, what's that number? I would like to believe, strongly believe, that we have a product that, with the current staff how we're building it, we could get ourselves to the 100,000. And then be able from there, the plan, and we'll talk about some of the more details, is go public at that point potentially to really use that money to take us from 10% market share up to 50, 60, 70, whatever the market is. Where we're different than in some industries is that if you're Netflix, if you're Uber or Lyft, I'm going into one car now. Am I picking Uber? Picking Lyft. Only one can make money. How many of us have multiple streaming services? You could have Netflix and you could have even Amazon videos. You could have Hulu. You could have different videos. I look today, and the way I'm building out Gparency as time progresses, is that I want to be in a situation, from Gparency's view of the world, is that similar to what Amazon says. If you're in commercial real estate, how are you not a member? So these numbers, when you talk about valuations, the valuations we talk about is that when it comes to commercial real estate, how do you value real estate? You can do a rent multiplier per square foot, replacement cost, cap rates. The driver today is driven for the most part by cap rate. Is that the only indicator? No. Similar works the same exact way when I understand in the public markets, in businesses. Are there multiple ways to come to valuation? Yes. But there's a certain back of the envelope direction that if we have 100,000 members paying $5,000 a year, which is $500 million, plus that's the recurring, plus whatever percent will also use us for the transactions. What's the multiplier in that? And apply that number. Is it 4 times? Is it 6 times? Is it 10 times? Is it 20 times? What number do you think that number is? And then where the forward-looking numbers there. So when you're coming in today at $85 million, where do you think we're going to? Do you think we could go to the 100,000? Do you want to times it by 5? Does that mean you're getting 50 times your money, 20 times your money, 30 times your money? That's your decision. You have to make this decision on your own. I took the risk, believing that with God's help, I have a product that the first time in my life, there's no reason someone should tell me no. And we should be able to go at a bare minimum get to 8,000 people, the people I dealt with in my career, and be able to springboard that, as you see the technology, to 100,000, and then beyond that by taking the next raise of money to go take it. Slightly over 4.5 million of the 6 million has even been verbally committed, already down to cash in the bank. So the last 1.5 million, like I wrote, I'm offered it to. I know this is also being live streamed, and this is going to be saved on a video afterward. The impetus of this was always, like I said, when Google went public, I remember vividly that they said they wanted to offer shares that the average person could invest. And I always said, one day I dream I could do that. And I always looked to say, let me set aside some of this raise to go ahead and offer it to the LinkedIn audience. My LinkedIn audience was extremely supportive of me. I have 40,000 followers. The name of the company came from there. Different ideas, logos, comment, everything came in feedback from the audience. So if you're watching this growth, let me go ahead and offer it to you. So the first group, if we're going to be oversubscribed from this, I'm offering it now over the next week or two to the LinkedIn audience first, and then keep opening up to the broader real estate community, broader real estate market at large. The investment minimum is $25,000. The maximum is $250,000. The same way the investors came in before. The only difference in this round, if you're investing today versus one of the investors who invested prior to today, is that those invested prior to today, because it was not, this is called a public solicitation. Another thing I learned. That's why you don't see really ads about real estate. I'm raising money for a deal. You want to invest? Yet people are raising money all day because a lot of securities laws that are involved. And in those securities laws is that you have to be an accredited investor. I don't set the rules of what an accredited investor is. The law is accredited investor. Quite frankly, I'm surprised in the world today with everyone's going after woke. And if you think about what an accredited investor is, it basically saying is that if you're rich, you're smart, you're knowledgeable. But the average person who has some money, wants to make an investment, I'm sorry, you have to reach a certain threshold. From our end of it, prior to today, prior to when I publicized this was a private placement. As a private placement, I'm able to just trust the person and ask them, are you accredited? Today, if you're investing, you have to prove you're accredited either by documentation or from your CPA or from your lawyer writing a letter. But the same documents that they signed, you signed the exact same documents. In the full thing of transparency, you'll have that same, to know that it's not like, oh, the insiders, I raised money at a lower valuation of this $6 million, but to you I'm raising higher. This is the number at this point. What are the plans with the success? So obviously, the ultimate dream, in my opinion, we spike up like crazy now. We stay private, similar to like a Bloomberg. Enjoy the cash flow, everyone gets the shares, everyone's happy. Realistically speaking, everyone says, Ira, that's a dream. How many companies get to do that, are fortunate to do that? Exit with a sale. You're going to go exit with a sale. Somewhere along the line, there's someone, it could either be some people, we're seeing it's existing data companies that want to compete more in the space and want our offerings, which we have a uniqueness is listings and banking information. It could be an inroad of a new company wants to come into the space. It could be a bank that wants the deal flow. And exit with a sale. The third option is go on public. At this point, I made a decision that once I put together a board, and even though I wasn't obligated to put together a board that has independent vote from the shareholders, there's 5 people on the board, and 3 of the 5, were voted in by the shareholders. That when there's a conflict issue that I'm involved in, they make the decision, have the power to make the decision. That was self-imposed. The reason we set these things up, and I set up an executive team, an amazing executive team, an amazing company. The staff is unbelievable that we have. Dedicated, loyal, devoted, and believe this mission together with me. Is that by going all these moves, I made one decision. I can't tell you if we're going public. I can tell you the movie's going to end. But I can tell you 2 things. When you're going to look back, is that you will not be able to have any claim at all of impropriety. Did I do something wrong with your money? Did I treat it differently how I ran and worked it? Number 1. Number 2 is that the decisions, I'm not running it that, oh, this is the way Ira wants it to run. Every single decision has been signed off from the board level, the executive team level, or even within a department. As mundane as going to a show and the head of the department wants to do this thing a certain way and I'm strong the other way, that's that department, I'll defer to them. This is directionally how we're building the company as a group, and that's why the same thing people said, you want 150 investors, they're going to drive you crazy. They're not driving me crazy. They're providing major value add to help the company get to where we are, and God willing, get it to the next level of where we want to take it to. What are the risks? You heard everything till now. This is the most important page. Number 1, I'm a salesman. So obviously I'm a salesman, and I took the risk, and I want you to share this with me to take this company to the next level. The bottom line is, all your money could get lost. Every nickel. Why, what, where? I don't know. Something could happen that unforeseen. All your money's at risk. The most common sentiment shared by investors, we end up becoming just a discount broker. So is your money going to be lost? Shouldn't. But over like this, when I told this story from the beginning, this guy tells me, Ira, worst comes to worst, you're a discount broker. You'll give me back a couple of dollars every week, and I'll get my money back. By the time my grandchildren have grandchildren, they'll get the last payments of my initial investment. So where else can I hedge myself? Normally invest in a deal that could be 100 times return. It's going to be a rocket ship. It blows up, it's gone. Over here, I don't have that issue. Just like I started with a disclaimer written by the attorney, I'm going to put the same thing here. Before moving forward, please read the placement memorandum, which includes what we consider to be the most significant risk factors. So I want to thank you for participating and joining. If there was no one asked questions, if there's any questions, I'll stay another minute or 2. If they're emailing, you can email questions to invest@Gparency. After this call, you know my number. I'm accessible all the time. I'll say it here again. It's 917-597-2197. Again, 917-597-2197. My email address is iraz, I-R-A-Z, @gparency.com. If you're interested in moving forward, please move forward by going back to the site at gparency.com/invest, and then fill out the form which best represents your interest. Thank you very much, whether you're here to make the investment or you're here to just learn about what we're doing, And if you could spread it in the most positive way, if you have any constructive criticism, I'd love to hear it, because now you know the vision I want to get to. I have big charitable plans with this, and I'm putting all my all to try to make this work the best we can. Thank you so much for listening.